Now I'm guessing you've heard of wallstreetbets, and you've probably heard of them making unimaginable gains, turning $20,000 into $1.2 million in just a day. There are countless examples of such gains from a lot of different traders, who use very different strategies, but most of them have one main thing in common. They make these fortunes on options, more specifically 0-day still expiry options, which is considered by many as yolo-ing, as pure gambling, and is the reason why losses proportionately outweigh the gains on the beloved subreddit. But that 1% of traders that made gains gave me the confidence that there is a way to, put it bluntly, make a shit ton of money. Anyway, with that I started my journey to make a real life infinite money glitch by building a yolo-ing options trading bot. But first let's quickly cover the basics. Options are financial derivatives that give an investor the right but not the obligation to buy or sell an underlying asset at a specified price, known as strike price, before or at the expiration date of the option. Now that's the definition, but in short, options allow you to leverage your position and make larger gains and losses than with stocks. And for the sake of this video you need to understand three things. Firstly, there are two types of options: put and call. A put option allows you to make money if the stock falls, while a call option allows you to make money if the stock goes up. Secondly, each option has an expiration date marking when the option contract expires. And lastly, every option has a strike price above or below which a stock has to rise or fall when exercising the option would be profitable. When that's the case, we say that an option is in the money, and when exercising the option wouldn't be profitable, we say that the option is out of the money. Now the closer the option is to its expiration date, the more volatile it gets, which is how you can make or lose a lot of money, and that's why we'll be trading options expiring on the same day of us buying them, or in other words, we'll be trading 0-day still expiry options. Secondly, we have to choose options, so which stock we'll be trading. And because I want it to be as easy as possible to buy and sell options at fair prices, we need a stock or an ETF, hint hint, with very liquid options markets. And what better ETF to choose than the almighty SPY, which seems to be extremely popular with wallstreetbets. And finally, the strike price. Because we once again want the options to be as volatile as possible, we have to buy options with strike prices as close to the actual price of the ETF as possible, because that way the option can fluctuate between being out of the money to in the money very quickly. And that's why we'll be trading options with a strike price $1 above or below the actual price of SPY. And that brings us to the strategy. Because unlike most traders on wallstreetbets, we need to come up with the actual rules for when to get in a trade and when to exit the trade. Now there are a ton of different strategies we could use, but in the spirit of yolo-ing I decided to go with the one I saw on wallstreetbets. Don't ask me about the actual post because it was a while ago, but the point of it was that you inverse the open, meaning that you watch SPY in the pre-market and in the first couple of minutes after open. If it goes up by a certain percentage, you buy a $1 out of the money put, with the hopes of SPY falling and your option printing money. If instead SPY falls by a certain percentage, you buy a $1 out of the money call with the hopes of SPY going back up. And then you need to figure out when to sell for a loss or a profit. The next day you repeat the process while always going all in with your whole account. So we essentially have 4 key elements we can play with. A percentage change in SPY's price for us to buy a call, let's call it a call condition. Then we also have to do the same for puts, so a put condition, and we need to set the take profit and the stop loss. For example, let's set the call condition to negative 0.32%, put condition to 0.32%, stop loss to 5% and take profit to 20%. Now let's imagine SPY jumps up by 0.4% to $470 in the first minute after open. We would immediately buy a 0-day still expiry SPY put option with a strike price at $469 because remember, we are buying $1 out of the money option. Once we enter the trade, we stop looking at the SPY and start looking at the options price. If the option goes flat until the end of the day, we'll close the position just before the market closes because we have a 0-day still expiry option and we can't hold it overnight. If the option drops by 5%, it triggers our stop loss and we close the position, and if it goes up by 20%, it triggers our take profit and we also close the position. And this is basically the logic behind the trading bot I built. I won't go into detail, but if you want me to post the code somewhere, let me know know down in the comments. As I said earlier, we have 4 main parameters we can change, and we obviously can't just set them to a random number expecting to make money, because that would be like trading based on a feeling. So we have to do a lot of testing to find the best parameters, which is why we'll need a lot of historical data. I searched across the web and ended up using Polygon's API, which has a free plan that allows me to get 2 years of historical options and stock data. Now I could have spent $200 to get 5 years of data, but I don't think it was worth it at this stage. Unfortunately, by using the free plan, I'm also limited by the amount of data I can get per minute, which means that every time I change parameters, it will take me about 2 hours to go through 2 years of data, and I'm obviously not sponsored by them, which should be self-evident by the number of my subscribers, but you can change that, please. So yeah, backtesting was a pain in the ass, and after about 40 runs taking about 80 hours, I came up with these parameters: call condition at negative 0.40%, put condition at 0.37%, stop loss at negative 5%, and take profit at 44%. Once I ran this combination for the past 2 years, the starting position of $10,000 turned into about $163,000. In about 500 trading days, we've made 200 trades, which is about 1 trade every 2 to 3 days. And the portfolio's chart would look like this, with the lowest point at $5,316.95 and the highest point at $1,601,221.42. As you can see, the trading bot, or should I say the gambling bot, is quite volatile, and even though the lowest point was $5,500, meaning you would be down by 47%, it doesn't necessarily mean that your account wouldn't fall further down, because if we look at the chart, you could start trading here and then the bot would just make a series of bad trades, completely destroying your account. Ideally, this chart would just exponentially go up, looking something like this, and maybe I could get close to this infinite money bot if I had paid for the advanced version of the API, allowing me to backtest infinitely faster with a ton more data. But let's be realistic here, if that's even possible, I'm probably not the first one to think of that, unless no one actually wanted to take the risk by investing in a bot with such a profound strategy. Having that said, the bot made its last trade in December 2023, and it made less and less trades as time went by, especially when we compare 2022 to 2023. I was planning to run the bot for the last 30 days, but it would be pointless since it hasn't made a single trade in 2024. But making just a few great trades could be beneficial when we consider trading fees. For example, Interactive Brokers has an options fee of 15 cents per contract, which normally wouldn't be that high, but when the price of the option is below $1, the fees become just completely insane, because as soon as the bot makes a trade, it loses 15% if not more of its account value. For example, the end account position of the last 2 years would reduce to 0, and yes, I'm being serious, $0, meaning that we would not in fact be up by 8,531%, but down by 100%. I think there are some other brokers that have an API for trading options and don't have fees, but I honestly haven't looked deep enough. Now you see, you've been tricked. I'm a Euro poor making absolutely zero money from YouTube, because I simply don't yet have 1000 subscribers, so there was no way I was going to go to the bank, take out a 10k loan in wallstreetbets fashion and YOLO it on options, even though the bot is supposedly successful. Having that said, I want to put this bot to the test with actual money once I get my first YouTube paycheck and get monetized by hitting 1000 subscribers. So if you want to see that happen, subscribe, like and share, and thanks for watching.